Well, yes, constitutional amendment yesterday. There is a place for all castes. Is there a place for merit is what we want to ask. But those questions for another day. For the moment, good morning to all of you. Good morning, Anuj and Sonia as well. We are greeted with a fair mix of red and green on the screen. Wall Street is up, Asia is down, dollar is down, crude is up. So what will it all mean for us? It does look like rupee will take a little more of a dip, and that should be helpful for some constituencies like Infotex. Crude will be up, and that will be negative for some constituencies like oil sensitives. Could be a mixed day. Perhaps, I really want to hear what Anuj has to say. It's 4 days on the trot that the bulls have had a good time. So will it be a little bit of profit booking or give back time? That would be the question, really, as we are, very close to the 11,000 mark or 10,900 mark.
Oh, absolutely. Lata, morning. Anuj, morning. Luckily, crude this morning has fallen about 1%, Brent that is. So, after that huge run-up that we've seen, a little bit of a cool-off is what we're seeing this morning. So, let's see whether the bulls take that with both hands. Also, a lot of other cues today. You have TCS earnings, Bandhan Bank reports its numbers, Goa Carbon, smaller companies reporting earnings. Yes Bank has finalized those candidates. No names have come through. There's also GST Council meet scheduled today. So, let's see what comes out of that. And there is the Bank Nifty weekly options expiry. So let's take it from there. Anuj, morning. If you look at the last fortnight, the market has made sort of higher tops and higher bottoms. This buy on dip strategy, will it continue to be the prudent way to approach the market?
Morning, Sonia. Good to have you back. Just looking at the internals yesterday, the Bank Nifty future, because if you're trading in the market, you should look at the future. The Bank Nifty future, it opened at 27,752. And it closed at 27,752.
Oh, really?
So if you bought in the morning or you sold in the morning, by the end of the day, you did nothing. In between, it gave an intraday dip to 27,452. Now, of course, it all looks beautiful with hindsight. If at open, you would have sold, and then, you covered at 27,452 and bought.
You didn't do nothing. You got a little bit of blood pressure in the meantime as well, right?
But, this is trading, right? The point is, you should have decided, okay, whether I want to buy the dip or I want to sell the rally. You want to do both, great. But the point is, you buy the dip, you make money. You sell the big rallies, you make money. The larger theme, of course, has been that you buy the dip because this market has been moving up. Similar was the case with the Nifty 50. What has happened is that the Bank Nifty has now moved within 2.5% of a lifetime high. Very quietly but surely, while the Nifty 50 is still 7.5% away from its lifetime high. Also, what's the missing piece? The two biggest stocks of India, Reliance and TCS, both are off 17% from their highs. So, the two biggest stocks and the kind of market cap they have, because they are 17% off their highs, it looks like the market's done nothing. But the fact is that the mid-cap index and the Nifty Junior, they moved up 10% in the last 3 months. And portfolios have once again started to make money. And the market bet has been constructive over the last 1 month. To cut a long story short, end of October onwards, the market's given you a decent run. The things started to improve October onwards. And they've continued to look good, except for the large couple of stocks because of which the Nifty looks a bit subdued.
So today, of course, TCS will be in focus, tomorrow Infosys. But this buy on dips, is this the template for the year as well? I know it's too early, but how do you approach it in the longer scheme of things?
Yeah, I think that is the case, Sonia. This market right now perhaps does not have trigger to take out its previous highs, but you're making decent money if you're buying panic. Yesterday, for example, we're discussing it in top 10 also, and it played out like that. IndusInd Bank's numbers, for example. I mean, the call you need to take was that how much of the bad news is priced in. I think at 1650 thereabout, that was the case, and you saw that big rally. Anyway, the other point is, this month, the MSCI Emerging Market Index is up 2.5%. The MSCI Asia ex Japan is up 1.5%. MSCI India is down 1.5%. And most of that is because, while the Nifty is flat, because of currency. Currency over the last 2 days has really been the big story, and that is where the Brent crude really comes in. The equities so far are ignoring it, the big move in Brent, but the firm negative correlation between crude and market is well and truly intact. The only issue with that is that if that was the case, the Bank Nifty should have underperformed the most, but it's actually outperformed. So that's the market for you. But overall, the bit of underperformance to emerging market is on account of crude. Let's see if we can ignore that. For how long can we ignore
it? No, the negative correlation between crude and Bank Nifty is not proven at all. It is more between crude and banks. Unfortunately, our bank Nifty is comprised of the best banks, of the private banks, which can overcome the inflation sensitivity. They have that clout. If you had an index which had all the banks and NBFCs, if you had a finance index, that would have been negatively correlated. Unfortunately, our indices are made up of those that are able to weather the storm.
Just for today, I think yesterday's low becomes the reference. Since there are compulsive traders
low
in both Nifty future and the bank Nifty future. Though
so which would that be?
You should not be trading every day. The low was 27,452 on the bank Nifty future and 10,765 on the Nifty future. Though as I said, you should not be trading every day. This is a market in which you want to take a positional call. Closer to 10,550 you buy, and closer to 11,000 you book profit, and you end up making money.
Actually, things are not looking terribly bad. At $60, if the market has not reacted so far so badly, it's not a very bad number for us. $60 is still a very good number for crude. Yes. So as an economy, we should not worry about crude at 60. I think the big overhang will be really if there is a fiscal blowout. There is one half of the economy or business leaders who believe this government has a good record on fisc and they may not spoil it. And there is the other one says, yeah, but the last 4 years were not poll years. This is a poll year, and will that blow? That is the overhang but that overhang will first hit the bond markets. If some such a package is announced, it's bonds that will react negatively. Stocks will take to it when the time comes.
Okay, for now, the SGX Nifty is indicating that the start will be in the green. There's about a 30-point bump up that we're seeing. Let's see which way it takes us. For now, let's kickstart the show and tell you what our wise experts have to say as we head into trade this morning. Mahesh Nandurkar of CLSA says, excluding oil PSUs, earnings growth is likely to touch a 7-quarter high of 17%, helped by gain in financials, which are now seeing an improvement on a low base. Domestic companies' trend is mixed in their opinion, with consumers, capital goods and power likely to report a double-digit growth, while telecom, cement and autos are likely to post weak numbers. IT and pharma should report a decent growth on a stronger demand and a weak base respectively. The Nifty growth, however, is likely to be weak at 1% year-on-year, bringing the 9-month growth to just 5% year-on-year.
Yeah, Nifty is affected by a large constituency. Okay, we've got more equity calls actually today. Sayon Mukherjee of Nomura says their approach to portfolio construction continues to be selective, bottom-up. They prefer turnaround sectors such as corporate banks and healthcare, which represent prospects of strong earnings recovery that could boost valuation multiples. Nomura chooses companies with long-term growth prospects and strong cash flows, where the recent market correction presents attractive valuations. They are underweight on consumers and NBFCs, where they believe current valuations are expensive and price in strong growth over the long run. Nomura's top picks: ICICI Bank, Axis Bank, L&T, M&M, Maruti Suzuki and Glenmark Farm.
Okay, let's get you some money market views as well. The dollar rupee, in fact, has weakened further. Yesterday it closed at 70.46. Mohan Shenoy of Kotak Mahindra Bank says the rupee is ignoring the dollar weakness globally and is predominantly tracking the Brent crude price. He expects the dollar INR trading range for the day to be 70.40 to 70.80.
Actually, it went even to 70.60 and thereafter strengthened a bit. On the bond front, Mohan Shenoy says the issuance of a new 10-year benchmark tomorrow has resulted in realignment of the gilt yield curve and spread compression. However, an elevated crude price could impact sentiment. He expects the current 10-year benchmark bond yield to trade in a range of 7.46 to 7.50. The new 10-year that's going to be issued tomorrow, you can start trading it like from yesterday. It's called the when issued market, and the when issued market is saying that the new 10-year would be 7.3. That is acting as a positive for the entire yield curve, because if that's going to be bid at 7, and everybody wants the new 10-year, so that's why the bond, that price goes up and the yield goes down. So if the new 10-year is at 7.3, why should the old 10-year be all the way at 7.5? So there is that technical pressure as well, which is not allowing the yield to rise.
Okay, well, the SGX Nifty is up. Global markets are a bit mixed today, actually. Kospi right now at the low point. Here's Nigel with the world view.
Well, that's right. The headline number looks very, very good because the Dow has posted a 4-session winning streak, and that's the best we've seen in the last few months. But remember, those markets as well, they came off the high point of the day. The crucial factor was the Fed meet minutes. They confirmed that patience in rate hikes because inflation numbers may not be as high as earlier anticipated, and that's what could slow down the pace in terms of the rate hikes. We also had a couple of stocks like Caterpillar, Boeing. Both of them did well because they're expecting a positive outcome of the meeting between the United States as well as China. So we had the Dow as well ending with a gain of around 100 points. It was up nearly around 200 points at one point of time. And other stocks, some of those FANG stocks as well, continued to do well. The European markets as well did well. Most of those markets, they ended well in the green with gains of close to around 0.5%. You had the auto space that did well. Technology stocks as well did well. And there was some optimism in terms of home sales in 2019. We had Taylor Wimpey that came out with their note. That stock rallied, and the entire real estate basket as well did very, very well. We've been talking about the emerging markets as well as the developed markets. One market that's really stood out is the Brazilian index, and the Bovespa has rallied nearly around 10% from the lows that we saw in December 26. So that's really been the big outperformer, silently moving higher. There are measures that have been announced by the new government in Brazil, talking about privatization of various companies. That's why that market's up nearly around 10,000 points odd. The fear today is that Brent crude prices have moved up marginally, close to around $1 overnight. The OPEC production cuts, and the Saudi minister out there has confirmed that their exports could fall, production numbers could fall as well, and that's what's pushed up prices both of NYMEX as well as of Brent crude. But the dollar index, that's weakened a tad bit on the back of, the Fed minutes that came out there. Maybe the rate hikes will not happen as fast a pace. We have seen some strength on the yen. Not good news for the Nikkei. And most of those Asian markets as well, they have come off the high point of the day. The Shanghai market as flat as can be. The SGX Nifty, the last time I checked, was indicating a green start, but earlier in the day it was indicating a start of around 35 to 40 points in the green. Back to you guys.
The Asian markets are slightly subdued actually. The Japanese market, if you look at it, is down almost 300 odd points. Chinese inflation data missed expectations, so there is some amount of disappointment over there. Hong Kong as well is under quite a bit of pressure. Let's see which way things go. For now, SGX is holding up in the green. But this is our segment where we tell you about the top 10 stocks to look forward to as you start trade today. Anuj, what are you looking at?
Sonia, I'm just focusing on a sector today, and within that, one of the largest stocks there, ITC. Now, yesterday there was quite a bit of gains. So just doing some research here. If you see the 4-year return for ITC, it's been 10%. The FMCG index is 50% and HUL is 100% over the last 4 years, of course. That's the kind of underperformance that HUL has shown. Now, if you look at the price to earnings ratio 1 year forward, ITC trades at 26 times. Lever trades at 52 times, and the sector, of course, trades at 45 to 48 times. Now, obviously, there's a reason for that. In terms of EPS CAGR, ITC is lower than the others because, it's a thin product, and there are other products as well, but Lever is clean FMCG play, so 15% is the EPS CAGR. Sector also is 15%. ITC is 12%. But you ask yourself, if 12% to 15%, should that warrant half the multiple for the sector? That's not the case. The problem for ITC has been that the tax is the most
vulnerability to tax.
It's vulnerability. I think today is the GST Council meet. Finally, the question that you're asking is, are we reaching a stable tax regime? All you need is stability in tax regime, and if that is the case, then that would take a big overhang, and it will of course still trade at a discount to the sector, but that discount should not be 50% of the sector multiple. It would come down to say around 20% thereabout. But anyway, that's the long-term play. But started to see some solid delivery buying. So that's why I was just looking at this particular stock.
Okay, even I'm just speaking about sectors. Obviously, crude sensitives. Oil companies, airlines could struggle a bit. It's negative news. I don't know what the stocks will do, but the news is negative for them. And because of that, the rupee is expected to dip a little more. It could be set off with some positivity for infotech stocks.
Okay, well, IndusInd Bank, that one had a big move yesterday in the last hour. Let's find out what brokerages are saying post the numbers that came in yesterday. Abhishek, over to you.
Well, Sonia, to begin with, brokerages have mentioned that there are few positive and negative from the results. The positive being that the loan growth momentum remains fairly strong for IndusInd Bank, and at 35%, it is one of the best that they have seen over the last few years. However, on the flip side, brokerages mentioned that elevated slippages and decline in provision coverage ratio is a big cause of worry, and an overhang of the IL&FS account is also a negative worry. Net interest margin has been declining right from 4% to 3.83%. Therefore, Therefore, brokerages have cut their target earning estimate for FY19 between 4 to 6% and for FY20 between 2 to 6%. Two brokerages have cut their target price, HSBC and IDFC Securities. Largely, brokerages are bullish on the stock with a target price ranging from 1900 to 2000 per share.
Okay, Abhishek, thanks a lot for that. That's, of course, IndusInd Bank made a big move in trade in last hour, but the other banks also in focus today?
Yes, I mean, Mint has reported that 7 power plants which are under the SBI Samadhan scheme. The Samadhan is a stressed asset resolution acronym. And under that, Mint reports that 3 of the plants could get sold to Adani Group. The plants are, I think, KSK Mahanadi, GMR Chhattisgarh and Coastal Energen. If that is indeed the case, that's a positive. It won't be a great deal of money because the plants would be sold at 40 rupees to 100, 40 paise to a rupee or 50 paise to a rupee. It would be a haircut, but all that is already in the price. The fact that the resolution is happening could be positive for some of these banks.
Okay, we'll keep an eye out on SBI, PNB, Bank of India, etc. But Delta Corp also came out with its numbers. Sonal, they look like a decent set.
Yes, absolutely, Sonia. They're largely in line with what the street was expecting. The revenue growth, that came in at 27%, driven by a 30% growth in the casino business. But margins, they continue to be under pressure. We're down around 156 basis points on a year-on-year basis. That is because of the hike in Goa casino license fee. But the online gaming business, that also did pretty well. The revenue growth there was around 35%. That is because of aggressive marketing that the company has undertaken. The other good point is that the company continues to gain market share from the smaller casinos. On 9-month FY18 basis, the company has been able to do an EPS which is equal to FY18 EPS. So that is a positive. MK says that they expect the momentum to continue, driven by rising footfalls and also improving gross gaming revenue. They have a buy rating with a target price of 380 rupees. Back to you.
Okay, that's Delta Corp. It's done well, of course. Anisha, what are the other stocks in news?
Hi Anuj, good morning. Let me start with Adani Enterprises. That stock was volatile in trade yesterday, and now we understand that Adani Group has signed an MOU or Memorandum of Understanding with the government of Andhra Pradesh to set up data centers around Visakhapatnam. Now the total investment would be a whopping 70,000 crores, but do remember this has to be done over a period of 20 years, but nonetheless a sentiment positive. Moving on to another sentiment positive, and this one is for Ashok Leyland. That one because the company has backed orders for around 2,850 buses from various state governments, and they have to deliver all these buses by March 2019 itself. So maybe some fresh revenue trickling in for the Q4 for the company. Moving on to Vakrangi, because they have received some observations after MCA or the Ministry of Corporate Affairs had done some inspection. So that is a negative. And lastly, keep an eye out on Dilip Bilkon. Yesterday, the stock was under pressure because of the guidance cut as well as the ratings cut. Today, they tell us that they have received a financial closure for one of the assets. So that might aid the sentiment today. Back to you guys.
All right, thanks a lot for that, Anisha. Well, here's a quick recap of our stocks to watch this morning. The top stocks in focus with positive news flow: ITC, IndusInd Bank, SBI, Bank of India, PNB, Canara Bank, Delta Corp, Adani Enterprises, Ashok Leyland, Infosys, TCS and HCL Tech. While the stocks with negative news flow this morning, you have HPCL, BPCL, IOC, Asian Paints, Berger Paints, Kansai, Nerolac, Jet Airways, Indigo and SpiceJet, with the way crude has moved up over the last many days, a 5.5% move yesterday.
All right. There is another important news that we will track all through today. It may not have specific stock impact, but it is going to have an economy impact, and that's the GST Council meeting. The Council will meet today, and we learned from sources that at its 32nd meeting, the Council will focus on revenue mobilization. Sources say the Council may also consider a special report prepared by a group of ministers on how to mobilize revenue. Timsi Jaipuria is here with the details.
Well, a lot is on the plate of GST Council this time, starting with rate rationalization for under-construction houses from 12% to 5% without ITC, discussions on a relief package for MSMEs on the lines of recommendations made by the GOM, considering the proposal to increase GST registration threshold from current 20 lakh rupees to 75 lakh rupees, allowing composition scheme taxpayers to file annual returns with a quarterly payment of taxes, carving out a separate composition scheme for service providers with a threshold of up to 50 lakhs taxed at 5%, Also, the Council will do further deliberations on revenue mobilization measures to overcome revenue shortfall across India. That will be a report submitted by a GOM on revenue mobilization. Council will also consider the suggestions made by GOM on natural disaster cess as to whether to allow states to levy an additional 1% cess on selected items. Crucial here will be to see whether Kerala will be allowed to do so as a first case on the lines of the recommendations and how soon they will take it forward. The Council will also consider the long pending demand to bring in rates of state-run lotteries and private lotteries at par at 28%, which can actually mean an additional revenue of 1,250 crore rupees. Government is also likely to give its nod to the idea to match RFID data by engaging with NHAI to have better enforcement under the e-Wibble system. Let's see what happens finally and whether, like many instances in the past, there are some additional agenda items too which get circulated to the Council at the last moment. We'll keep you getting the live action.
Okay, well, that's of course a big cue to watch out for today. But what are the brokerages saying about other stocks? Here's Mangalam. Mangalam?
Well, Anuj, to start with, we have CLSA writing on the mid-cap space as a whole. They believe that there is bottom-up value emerging. However, with a caveat that 2019 could see a lot of volatility in the mid-cap space given the macro factors. There is valuation comfort and they're chasing structural themes. So their key picks are Aditya Birla Fashion Retail, Apollo Hospitals, Godrej Properties, Lemon Tree Hotels, Supreme Industries, and they've raised the target price on TTK Prestige, and Westlife Development is also one of their key picks. In terms of their key sells, they have Voltas and Pidilite purely on account of expensive valuations. Moving away from mid-caps, then the latest entrant to the Nifty, JSW Steel. Nomura's written on JSW Steel. They believe that the third quarter realizations and EBITDA is likely to be lower. Their revenue is likely to decline by about 7%, just under the 20,000 crore mark. And the EBITDA per ton may fall to about 9,300 rupees per ton. However, they still maintain their buy call on the stock with a target price of 365.
All right, thanks a lot for that. So CLSA going big on a couple of mid-cap names like AB Fashion and Apollo Hospitals.